Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look across markets. I'm going to be giving you a quick update, and we're going to be taking a look at what events are coming up this week and potentially how things could sort of shape up. But let's start here by looking at the US dollar, which is seeing a bit of a rally at the start of the week. We're mostly driven by sort of safe haven flows, you could probably argue. There's been a bit of focus at the start of the week on China and the COVID situation there. Basically, there'd been a lot of optimism in the last couple of weeks that they might be moving towards a less strict regime in terms of containing coronavirus. You guys will recall that for the longest time, they've been following this zero COVID stance. Well, there'd been a lot of optimism that they were going to move away from that. But just as that optimism had started to grow, we've now seen lockdowns coming back in and coronavirus infections rising. So that's been one of the main talking points, at least in Asian markets, which seems to be weighing on the Chinese yuan, lifting the US dollar a little bit. But as you can see here, looking at the Dixie from a technical standpoint, I think we're still looking quite bearish. Like we were in this uptrend for the whole year, and we recently broke out below it. So I think, technically speaking, anyway, it looks as though the dollar is potentially going to be vulnerable to being sold as it rallies. You can see we're currently probing this key resistance area in the sort of low 107s. In terms of Fed, we've had a Fed speaker, Fed's Bostich, over the weekend, and he was endorsing this slower pace of rate hikes. That's been a factor which has been weighing on the dollar recently. Although, to be fair to him, Bostich did also talk about the fact that maybe interest rates would have to remain higher for longer than markets currently pricing. So it's not an out-and-out dovish message from the Fed. Yes, they're talking about a slower pace of interest rate hikes, but they're still talking about this higher for longer story. So, yeah, I mean, I'm not sure. Take that as you will. We've got the Fed minutes coming up this week on Wednesday, which will give us some insight into the Fed's thinking at its last meeting. Remember, Jerome Powell did come across as very hawkish in that last meeting, and yeah, we're just going to be having to keep an eye on that. What's the general view at the Fed about the pace of interest rate hikes and where the terminal rate is going to be, and how long rates are going to be at that terminal rate, or at least very, very elevated? Those are going to be the main sort of things we need to think about. But yeah, aside from the minutes, we've got a batch of Fed speakers coming up tomorrow, and then a smattering throughout the rest of the week. But to be honest, guys, it is a pretty quiet week that we've got coming up. Thursday is Thanksgiving in the US, so Thursday and Friday are going to be pretty much dead. As you can see here from the calendar, there's nothing really on Thursday or Friday. The most interesting thing for me, aside from the Fed minutes, is these flash PMI data that we're getting from out of Europe, UK, and US. Flash PMI data for November, a very timely insight into how growth is panning out basically in these key economies. So the global growth story is important at the moment. Obviously, with the China lockdown easing, or the hopes of them moving away from their easing, was giving a bit of a boost to the growth story. But then, obviously, there's been this shift recently where they've had cases coming back and they're locking down again, and now this data is potentially going to show that growth continues to weaken in Europe and in the US. Let me just show you oil. Oil's a good indicator at the moment and has been in the last couple of months. As to sentiment regarding global growth, it's very much been a demand side driven market in the last couple of months. And you can see that WTI is still below 80 and very much eyeing a test of these recent lows that we had, which, if we can break below those, we could be opening the door once again to a shift back down towards these 2021 sort of mid to late 2021 lows in the 60 area. Although, to be fair, if you're looking at the price action in the last couple of weeks, it kind of looks like oil is more in a range as opposed to being in a downtrend. Remember, guys, for a while we were talking about these downtrends. We're in this aggressive downtrend, then we're in this slightly less aggressive downtrend. It looks like we've carved our way out of those and we're in a range. But anyway, we'll be keeping an eye on that. because if this global recession story continues to build, which is very likely, then I still think we're ultimately probably heading lower as opposed to higher. Although we do have this European ban on Russian oil coming up soon, so we need to just keep an eye on that. That could be a bit of a wild card that could send oil higher. But let's just finish off by taking a look at the S&P 500, which is a tiny bit lower this morning. Like I said, there's a bit of concerns about China and some safe haven flows going into the dollar, but very much hanging within recent ranges. Um, we've got a fairly quiet week heading up. Bit of focus on the Fed, bit of focus on that data that I said, the PMIs, but otherwise, this isn't really the pivotal week, to be honest. Things will be getting more interesting next week. Um, let's just take a look at that calendar, actually. Yeah, next week we'll be getting all that US jobs data, and then later on in December we'll be getting more US inflation data, and then the Fed meeting. So, the next couple of weeks are going to be really important for the story here for US stocks. For now, looks like consolidation is in store as we assess whether are we going to test this downtrend, because we're not far away from it. We only need to peak above 4,000 and then we'll be testing that downtrend which has been in play all year. And if we are still talking about a dovish Fed pivot, which again, like I was saying before, I think is probably premature because the Fed is still talking about this higher for longer with interest rates. Well, then, but if we are starting to talk about the dovish pivot, then we could be talking about a breakout above this downtrend and a test of this high from late summer. But anyway, guys, that's some of the things I'm looking at the start of the week. Hope you all enjoyed the video, and I'll see you all in the next one.